What's going on, everyone? Charlie here. We have one filing to talk about. Sorry about before, the audio, I guess, didn't record. But we have SR CBOE 2021-042, Fat Finger Check. Just kidding. It's a notice of filing and immediate effectiveness of a proposed rule change to enhance and clarify its price adjust process for certain market maker interests, specifically book order only, and bulk messages submitted through bulk ports, and modify the bulk message Fat Finger Check. So the purpose of this, again, is to change its or enhance its price adjust process for certain market maker interest, book only, and bulk messages submitted through bulk ports, and clarify other parts of that process, as well as modify the bulk message Fat Finger Check. Rule 5.32b describes the price adjust process, which applies to an order by default or not designated as cancel back. The system adjusts the price of an order designated as price adjust as follows. A, if a buy non, all, or none, other words known as AON order at the time of entry would lock or cross a protected quotation of another options exchange or the exchange, the system ranks and displays the order at one minimum price variation below or above the current national best offer or national best bid NBBO. Or number two, the offer of a sell AON order resting on the book at or better than the exchange's best offer. The system ranks the resting AON order one minimum price variation above or below the bid or offer of the non-AON order. Now, Supernote 5 here defines book-only order as an order the system ranks and executes pursuant to Rule 5.32, subjects to the price adjust process, or cancels as applicable without routing away to another exchange. Without routing away to another exchange. That's book only, non-dark pool. Now, scenario B, incoming all or none orders. If a buy or sell all or none order at the time of entry would cross a protected offer of another options exchange, or sell AON order resting on the book at or better than the exchange's best offer or bid, the system ranks the incoming AON order at a price equal to the protected offer or the offer of the resting AON order, respectively. Or lock or cross a protected offer of the exchange, the system ranks the incoming AON order at a price one minimum price variation below or above the protected offer. Now, the term bulk message means a single electronic message a user submits with an M capacity for the account of a market maker to the exchange, in which the user may enter, modify, or cancel up to an exchange specified number of bids and offers. Now, a bulk port is a dedicated logical port that provides users with the ability to submit bulk messages, single orders, and auction responses, each subject to certain restrictions. So what does this all mean? Well, they're filing this because the proposed rule change clarifies that bulk message bids and offers are only subject to single price adjustments. No longer can they be adjusted multiple times when an order doesn't fill. So again, if you have an order on there and it partially fills, like if we set like a sell wall and it eats a little bit of it, they can't move that price back up $2 or $3. It's got to stay within that variation zone. The proposed rule change also clarifies that the price adjust process applies to an order or remaining portion that does not execute upon entry. Therefore, the exchange does not believe it is necessary for it also to review resting market maker interest continuously and reprice as the market changes. So no more repricing continuously. Finally, the proposed rule change enhances the bulk message Fat Finger Check set forth in Rule 5.34A5. In accordance with the Fat Finger Check, the system cancels or rejects any bulk message bid or offer above or below the NBBO by more than a specified amount determined by the exchange. So in essence, in particular, the proposed rule change to enhance the price adjust process to adjust the price of book-only orders and bulk messages submitted by market makers through bulk ports will remove impediments and perfect the mechanism of a free and open market. The exchange also believes the proposed rule change to codify that bulk messages, bids, and offers may only be subject to a single price adjust will benefit investors by adding transparency to the rules. I agree. In addition, the exchange believes the proposed change to the bulk message Fat Finger Check will protect investors and the public interest, as the check will continue to mitigate potential risks associated with market makers submitting bulk message bids and offers at unintended prices, and risk associated with orders and quotes trading at prices that are extreme and potentially erroneous, which may likely have resulted from human or operational error, or both. So there you have it. That's basically it. Basically what this means, they're preventing market maker interest from adjusting the price outside the NBBO more than once, and any remaining portion of that order that's not filled, the same rule applies. So hope that helped. Jack to the T's, and you all have a good day. If anything else comes out, I'll let you know.